Hi everyone. Today's video is very special and important as it can help you understand a method to identify a bad company, perhaps a sinking boat, and often can turn out to be a company full of scams. If you deploy this method, you can save yourself from bad companies and significantly reduce your risk from investing in potential bankrupt companies. So let's get started. Let me pose a very relevant question to you and which can help you understand what I'm going to talk about. So identify a situation where business can go bankrupt. Do you think a business can go bankrupt when they're not increasing their revenue year by year? I don't think so. So imagine if you are making a revenue of 100 rupees every month, and if you keep on getting 100 rupees every month, you might not be able to increase your profit, but that doesn't mean that you are going to go bankrupt. Do you think a business can go bankrupt when they make average profit but good cash flows? I don't think so, because a company can make very low profit, but if they are able to generate cash out of it, they can still sustain their operations. Next is when businesses make huge profit but very poor cash flows. So you can understand it like this. So imagine you have established a manufacturing plant and you are manufacturing machineries for agricultural use, and there is huge demand for those machines. Now since you are selling an agricultural product, your customer base is farmers. They might be taking those machines in credit and you might not be able to get sufficient cash flows. So even though you are able to sell a lot of machines, but it's just that farmers are not paying their dues in time and you are not able to generate cash flows to sustain and maintain your operations. So in that case, you are definitely going to go bankrupt. So the lesson here is that you can have a low revenue, you can have a low profit, but you cannot afford to have a very poor cash flow. Otherwise, how would you buy raw materials, diesel, pay your employees to run your factories or manufacturing plants? So cash flow is very, very important in business. Let me give you two very solid reasons to understand why cash flow is very important. The first one is P&L statement follows accrual accounting. So what that means is that, so imagine you have a shop and you sell milk and you sold 100 liters in a day, and for the ease of calculation, let's assume you make a profit of 1 rupees per liter. But if only 80 people paid you and the rest 20 said that we will pay after a week, for you can say that you made a profit of 100 rupees, but it's just that only 80 people paid in full and 20 people paid with credit. Your real cash flow is just 80 rupees. But with accrual accounting standard, you can say that you have made a profit of 100 rupees. And this is precisely what happens with big companies. So imagine an infrastructure company. We have got a government contract and we will build a bridge, and the profit which we are going to make is 100 crores. So they can easily say that we are going to make 100 crores, but it's different matter whether the government is going to pay on time, whether the laborers will deliver in time, or other factors might take place before the actual cash flows in. Hence, cash flows are better metric to understand company's financial health. Let's try to understand the second reason. See, cash flow is very hard to manipulate as compared to net income. So you can manipulate your net income by taking very long-term contracts or by selling your products by giving lot of buybacks, or even you can produce fake sales invoices. So it's very easy to manipulate net income or your sales, and hence as compared to net income, cash flow is very hard to manipulate. Now also remember, cash is the king. A company that does not generate cash for a very long time cannot sustain its operations because they have to pay their employees and they have other expenses as well. Now let me take some examples to help you understand how cash flow is very important to understand if a company is performing well and is on the verge of bankruptcy. So let's take a very famous example, Ruchi Soya. So if you look at the profit and loss statement of Ruchi Soya, you can see that in March 2010, they made a net profit of 172 crores and the cash flow was 186 crores. But if you look at March 2011, even though the net profit was 213 crores, the cash flow from operating activity was minus 190 crores, which is completely off. And the same happened in 2012, where the net profit is 122, but the cash from operating activity is 904 crores. You can argue that cash from operating activity is very high from net profit and hence it is a good thing. But you have to understand that if cash from operating is not translating into net profit, then there is no meaning of such a high cash flow. And even with this difference, the cash flow seems very off and it cannot be trusted. Usually, if cash flow from operating activity is within the range of 0 to 20%, then it's fine. But if it is higher than that, either positively or negatively, then it puts a very bad image on the cash flow of the company. So if you look at the trend in 2010, it was in the right range, but since 2011, it has been completely off and it is not within the acceptable range of 0 to 20%. And hence, this is the reason why Ruchi Soya was a bad investment and it eventually got bankrupt. If you don't believe in my narrative, let's take an example of a very famous, or should I say very infamous company, Satyam Computers. All of us know about the Satyam scam, and let's try to see if we can go back and look at its cash flow statements and see if something is fishy there. So if you look at the P&L statement and cash flow statements, in 2006, they made a net profit of 1142 crores. But the cash from operating activity for an IT company went down to 752 crores, which is slightly off because if you look at good IT companies, their net profit is more or less equal to cash flow from operating activities, though there can be difference of 10 to 20%, which is acceptable. Similarly, if you look at in March 2007, the net profit was 1405 crores, but the cash flow again went down to 1000 crores. So these were kind of very simple indication that these companies were not reporting their cash flows or P&L statements rightly, or it's possible that they were not able to manage their cash flows better. Either of these two could be the reason. Since we as a retail investors don't have a lot of visibility, we should be aware of such misreportings. Now, all of us know that these figures were first through fake invoices, so I'm not going to debate on that, but this could be one of the methods where you can deploy and see if a company is bad from investment perspective. Now let me further prove my argument by doing a very simple exercise. So from year 2017 till 2021, I have analyzed the data of CFO, which is cash flow from operating activities, and net profit. And if you look at the difference for Asian Paints, which is one of the greatest stocks in Indian market, not because they have been a multi-bagger, but because they are very consistent in their profit margins and maintaining the cash flows out of all the paint companies available in Indian market. So if you look at this data, in 2017, the difference was minus 21%, which is not great, but it is acceptable. And in 2018, it was decent, up by 13%. And if you look at the average of last 5 years, it is 6%, is within acceptable range. Now, contrary to this, let's look at not so great paint company, Nerolac. Now in year 2017, the same ratio was minus 32%. So this looks like very bad. So even though they were able to sell their paints and make a net profit of 505 crores, but they were not able to maintain a cash flow of similar range. So if you look at the average of last 5 years, it is minus 18%, which is acceptable because in the last 2 years they have maintained cash flows very diligently, and that's why it's not a great stock for investment, because their cash flows to their net profit is significantly off a lot of times. Hope you have liked this analysis, and let me know if you have any questions. Thank you.